Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our M1 Finance stock buys for the week for the 16th of November 2020. We're going to go ahead and first take a look at stock futures up on the screen. Now we're going to take a look at some of the overseas markets, take a look whether they're positive or negative. Then we're going to go ahead and jump over into the M1 Finance Roth IRA account. Take a look at the overall performance. How has it performed during this pandemic? Then we'll take a look at our top 3 winners, our top 3 losers. Then we'll look at the 1 week performance. How did it compare in comparison to the 3 main indexes, and what are our best performing stocks and our worst performing stocks? And also, did we receive dividends? I believe we did receive some dividends last week because I know we do have that cash balance higher than normal. So we'll go ahead and go over all of that in today's video, plus our stock buy of the week. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button that would be visible down below to make it gray. Hit the bell to be notified every time we release a brand new video going over the stock market, dividends, occasionally real estate. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so stock futures right now overseas, I want to go ahead and hit that up. Japan just closed. As I refresh this page, Japan just closed right now at positive 2.02%. So overseas right now, Japan closed and they were very positive today. The Hong Kong market is up about 0.5%. So they are planning on closing here very shortly as well. And overall looking very positive. Now the US markets here, the S&P 500 0.89, the Nasdaq looking like it's having some recovery after last week of 0.9, and the Dow Jones up the highest here at 0.98%. So overall it is looking like Monday morning is going to start off pretty green, and depending on what sort of news is out there that's been floated around, we may see a move to the upside, continuation of green for the remainder of the day and maybe even for the week. So the main highlight here is a wall of money is ready for the post-pandemic economy. So there's a lot of private equities out there who have had to just sort of hold on to their cash just because there was a lot of uncertainty, whatever. And so they're holding on to all that cash. So that is going to be heading out to the small, mid, and large cap businesses. So that we should maybe see that starting here in early 2021. As right now, it's sort of holiday season, so a lot of the equity firms and big investors kind of take the holidays off, kind of watch what's going on with the market. I think that's a smart idea. Now, let's go ahead and jump over to the M1 Finance account. Now, we're looking at the overall performance. This portfolio finally broke above a $5,000 gain. So it has $3,490 of market gains and a little over $1,500 of earned dividends. So that is the highest point that this portfolio has reached here in 2020. So overall, doing really, really well. Now our best performers, let's go ahead and sort this by our best performers. We have Apple up 207%, followed by Eaton Vance up 191%, Lowe's 83%, and then it goes from there. And then our 3 worst performers are Simon Property Group, down 66%. It was down in the 70s, so it's definitely popping back up. It's still, that is a big loss there for that stock. Then we have Waco Group, Altria. So our big 3 winners are actually really big differences here. 66% to the downside, whereas these ones are in the 26, 25, 23. And this is retail. This is a real estate investment trust within the retail sector. This is malls. Waco Group is a retail shoe stock company. Altria, cigarettes and tobacco. Chevron is oil and gas. Another Tangri Factory outlet. This is another mall outlet. Walgreens is retail. AT&T is communications, but these 2 right here really aren't bad, by much. AT&T and 3M are only down 2 and, basically flat there for 3M. So really, all in all, we only have a few positions that are negative, and they're all related to either tobacco or tobacco and oil or retail. And with the Pfizer vaccine coming out, and in the future, say that these companies do recover, a lot of this will just kind of come back all on its own. So I just have to continue to hold through it, and maybe occasionally see if I have some opportunity out there, maybe throw some more cash at something. But at this moment, there's really nothing down here that I really want to throw any capital towards. Maybe here in the middle, I'll probably throw a couple dollars here, maybe at 3M or AT&T, but we'll talk about that here in just a minute. Now, as far as our dividends that we were paid out for last week for the 9th through the 13th, hopefully everyone had a safe Friday the 13th. We were paid out from Apple, $2.27, Eaton Vance, $6.56, Main Street Capital, $4.94, and Realty Income, $3.03. Now, these ones right here are two monthly paying companies. So Main Street Capital is a BDC, business development company, and Realty Income is a real estate investment trust, a REIT, and those pay out every single month dividends. So they paid out a little over $15 in dividends, leaving us with a cash balance of $67.03 to invest today. So that is what we're going to be focusing on next. What are we going to be buying with our capital? Now, if you guys haven't checked out Seeking Alpha, I talk about this in all of my videos, but I always get a bunch of new viewers and subscribers out there. So if you guys are interested in checking out this handy dandy tool, it's completely free to sign up for, and then you'll have access to plug in your portfolio by creating a portfolio and then entering all your stocks, where you have access to take a look at what is inside of every portfolio. You can look at the summary of your holdings, what's going on as far as their earnings, dividends, their growth, performance. I like to use the dividends tab, and then by clicking on the dividends, I can sort this by when companies are going ex-dividend. Now, today is the 16th of November. So right here, where are we at? Right here. Our next up company that is going to be going ex-dividend is on the 17th of November, and that would be Consolidated Edison, followed by Chevron, Walgreens, 3M. Now, right off the bat, I was pretty sure that ticker symbol ED, we did buy that last week. I have it written down right here. We purchased a little under one share for about $76, and that grew about 0.6%. Now, the past week before that, the prior week, we had bought Pfizer, and that is up about 6.42% since we had purchased those that one share there. So definitely some good buying going on there. Now, what is going ex-dividend this upcoming week here, or today, I suppose, or in the future? Right off the bat here, our first position that is negative in the portfolio is 3M, and this one is going ex-dividend right here on the 19th. So the 19th, this is this week here on Thursday. So already I could be focusing on Chevron, not Chevron, I just read it right here, Chevron, on 3M, and that is actually a pretty good idea. Chevron is a really solid company, growing and paying out dividends for the past 61 years and growing. Our other one that we could potentially buy is Walgreens. That one has been growing and paying out dividends for the past 44 years. Let's take a look what else we have here. So we had Walgreens on the 18th and Chevron on, I said it again. I saw it right there. So we have Chevron on the 17th, Walgreens on the 18th, and 3M on the 19th. So those are the three positions there. I'm going to go ahead, and I haven't done this in quite a while. Let's go ahead and bring up our charts. Bring this up here. So CVX, Walgreens, MMM. Let's take a look at net income, revenue, free cash flow, and let's look at Chevron first. Over the past 3 years, where has this one gone as far as its three main indexes here, or net income, revenue, and free cash flow? So Chevron here in the purple, we have its net income as of end of 2019. Its net income has been decreasing on a quarter by quarter basis. Also, its free cash flow has been, I'm going to go ahead and mute that. I have Minecraft playing in the background, so I can definitely hear it. And that in the orange here, we have revenue already in early 2019 having been decreased. Another one I want to go ahead and bring up is earnings per share trailing 12 months. Let's go ahead and bring that one up. So here in the green, we can see the trailing 12 months period for the earnings per share. So again, 2019, Chevron has gone nowhere but down. That's why the performance for Chevron is the current way it is. And right now, it's still going down. So it is not turning around at this moment. And until it does turn around, I'm not going to be adding any more capital into Chevron. Let's take a look at Walgreens here. Walgreens 2019, take a look at the earnings per share here. It had been growing from 2016. We started our portfolio in 2018. So Walgreens, when we bought into Walgreens, their earnings per share had been growing. Their revenue had been growing. Their net income and free cash flow had been growing. But what happened here? Midpoint 2019, we started to go down. Earnings per share down here in 2020. Right now earnings per share has dwindled from $4 and some change to just barely 0.5. So Walgreens right now during the pandemic is, until they start to recover, again, I'm not going to be adding any more capital into Walgreens. And 3M. This is the last one that is coming up on ex-dividend. Now 3M, here in 2018, they had a big turnaround. Here you can see that they started turning around, and at this time, I believe we had started our portfolio. We saw that 3M had been dipping. We bought into it. We had that growth with the earnings per share here, and they've been pretty consistent. They really haven't dipped. So right now, right off the bat, from what I can see here, they've been kind of trending, and that's safe. They've been kind of paddling. They paddled, and now they're just kind of letting their raft float, and it's trending sideways. Eventually, after this pandemic is over, they'll go back to normal operations. They should continue to see their earnings per share continue to grow. Now down here at the bottom, I can see that their free cash flow has been increasing, and their net income has been sustained. You don't see like a huge dip there in their net income. If we take away the earnings per share, let's go ahead and turn that off, and let's go ahead and turn off the revenue. We should see these charts a little bit better here. Here's net income. So in 2019, it had gone higher, and then here we had the pandemic, and their net income has been kind of trending, but it's not a substantial decrease, whereas their free cash flow, which isn't too important there, free cash flow has been climbing. So they're getting more cash available to them. Maybe they're probably storing that on the side to help them during this pandemic. So right now, 3M does look like the best buy from these three. So hopefully that was kind of fun to go through. Hopefully it didn't kick me out of M1 Finance, but I am going to be buying 3M today because I do believe it is the best opportunity of these three companies going ex-dividend. And oil and Chevron and Walgreens are just not in a good buying state at the moment until they show signs of recovery in the future, where then maybe I'll buy into them. That way I can still buy on the low, but I can get that recovery as other investors see that, hey, they're turning on around and it'd be worth it to invest. So let's go ahead, jump back over to M1 Finance, type in our 3M, select it. Plus right now, I'm actually negative on 3M by about 4%. So I'm actually able to dollar cost average my way into this, dollar cost average down. They are offering a 3.46% starting yield, whereas my yield is 3.32. This one is paying out $8.27, but I'll buy some more shares, maybe closer to $8.50. So that is always nice there. Let's go ahead and buy sell. Let's go ahead and punch in our $67.03. Continue and confirm. and hit that done. So that is going to be wrapping it up today's video. Let me know down in the comment section below what you thought of the breakdown of going over each three of the companies that I had thought about purchasing, and what do you think about my choice with 3M. Of the choices that were available, would you have chosen 3M? Do you know anyone, or do you own Chevron or Walgreens? Let me know down in the comment section below. And of course, if you haven't yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. And it looks like stock futures are climbing even higher right now as I refresh the page. So I do believe Monday is going to be pretty positive. And let's go ahead and see how the rest of the week goes. See you later, guys. Bye-bye.